The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the Weekend Podcast. I'm joined by Peter, not Steve, not Paddy. Just Peter and me.
Yeah.
That's all you need. Two people for conversation. In fact, you don't need that really. You know, my mother used to talk to herself. She didn't care. She just enjoyed talking, essentially.
Yeah.
And I often said, if someone was in the room, you know, she'd talk to them. It's a benefit to her. She doesn't care, though. Yeah. You know, talk to the ironing board if she needs to.
Right. The same could be said for you, really. I don't know if you need anybody else on this podcast. You could quite easily fill it by yourself.
No, it's nice to have a bit of feedback sometimes on certain things.
Okay. Yeah.
Do you know what I've done this week, Peter, that I haven't done in about, must be about, I think 10 years. I can't even remember the last time I did something like this. But I've done...
Exercise?
Close. Yeah, close.
Oh.
Yeah. Could be clean.
Yeah. The mind... Oh, well, it was Megan's birthday, so... No.
Yeah. I haven't done that in 10 years. You know what I'm saying?
I don't know.
Well, do you know what? Since I've stopped exercising, right? And I don't know why. I don't know if it coincided with my parents passing away, but I've just done less and less. And got to the stage where it does affect me. And I've always known this. I've always known it affects my mental well-being. And I've often said, when I've started exercising again, I've said to anyone, if you get depression, and you go to the doctor, you got depression, the first thing they should give you is say, right, do this, like half an hour of aerobic exercise a day, quite high level, not high level, but you are breathing, you know, so walking the dog fast, quickly, you know. Yeah. I walked the dog for half an hour a day, but it wasn't doing what I wanted. So I was walking the dog, I was doing a couple of pull-ups, but I used to do like at least, you know, half an hour on the treadmill, walking and running and press-ups. So I'm doing this. So do you know what, I've got into a routine where I've got out of exercise. So we went to my mother and father-in-law came down last weekend. My father does DIY. We had now brand new, it was Megan's birthday, and they bought her a Ninja grill, which goes outside. And we got a little sort of kitchen thing back there now. It's outside, and so we cooked on that. And they stayed at the local hotel, which is new. Okay, the village hotel. Right. And so I literally went there with the boys and used the pool. We sneaked in. Pretending we were staying there. And I thought, this is quite nice. The pool's all right, you know. And I look inside the gym as well. So this is quite nice. So I joined the gym. This week. I signed up for a 3-month contract, rolling contract. I should have gone for 12 months, so it's a bit cheaper. But anyway, so I got there. Right. Yeah, so I got there, and I thought, right, so I joined it Monday morning. Let's start early. Let's get going. Let's get into it. I've got to start this now because I've been feeling crap. I put on a bit of weight. I get to the gym nice and early. I thought, not miss. Right. I said, what time you open? 6 o'clock. Right, I'll be here at 5 to 6. So okay, cool. So literally Monday morning, I was up at 5:30, bag packed, up the gym. 5 minutes drive away. Let's be honest. And I pulled in there, you know. And do you know what? There's loads of people, you know, going in with their gym kit at 6 o'clock. What's wrong with these people?
Yeah, wow, okay.
I was surprised by that. I thought it would be the only maniac. It's like 5 to 6 in the morning.
No, it's really popular.
Yeah. So I got in there. I went to the sort of turnstile thing, and I put my little pass. It's a rubber band they give you on your wrist, and you know, put that on the sensor on the thing. Didn't let me in. I thought, bloody idiots. There's 2 people already behind me queuing. Sorry. So you go ahead. So they went ahead. I went to do it again. And another 2 people behind me queuing. Didn't work. What the hell's going on? I've come here, you know, fully prepared. I haven't exercised properly for a while, so it took a bit of, you know, mental gearing up to get up that time of morning to go for exercise, you know. And so I thought, this is someone's telling me upstairs, maybe at my age, 52, that I shouldn't be doing exercise. Maybe I don't know what's going on, but they want to. They haven't set up my bloody thing properly. They're fools. Bloody, they haven't set up my pass properly. So I just hurdled the when no one was watching. There's security cameras there, so I just hurdled over the turnstiles and cracked on with it. It wasn't that, and it wasn't that quiet. I even got to the pool after I did 20 minutes in the gym. Pool for half an hour swimming, and I was going to do it every day. And I thought. It was like old people in this. I said, why are you up this time of morning, you fools? I was getting my bloody nerves. I thought,
I thought you were going to say, it turns out it was the wrong gym.
Yeah, no, it turns out, right, I'd paid for off-peak.
Yeah, exactly.
I was going to call up and complain. Right, what the bloody are you? I thought, off-peak starts at 8 a.m.
Ah, right, okay. That was it. Sorry.
So anyway, I've done every day this week. Every day this week I've gone. Right, I've done 30 minutes swimming.
At 6 a.m., hurdle the bar.
Yeah, I pay for off-peak, but I crack on with peak because I've got a trivial thing like that get in the way of my fitness. So what I've been doing now, I thought, 6 a.m. isn't any good. I thought it would be quite quiet that time. It's not. So I've been looking for the optimum time. I've been taking different times. I'm only there for like an hour and a bit because I do 20-25 minutes on the machines just to get those muscles working again. I haven't used for a while, and then I do 30 minutes of swimming, 40 lengths. What do you think the optimum time would be? So I'm allowed to go in between 8 and 4, right? What do you think the optimum time, the quietest time? I think there's a girl in the reception there. I don't think she knows who, the kind of person I am, obviously. But I said, is it quite busy at this time? Yeah, it is. I mean, 6 a.m. I said, 6 a.m. Yeah, it's quite busy. And she was saying it like I wanted to be busy, like I was a sociable person or something. No, I don't want to be busy. Who wants to be busy? I don't. It's not that. But what time?
I would have thought it's going to be. Isn't it going to be sort of after that Keen lot? Isn't it like 9:30 in the morning?
Well, I tried that. Probably. Again, not that good. There's old biddies and all that. And at one point, I got really annoyed, right? There's 2 swim lanes, fast lane and slow lane. There's no middle lane. You can't overtake. And then there's a little bit of a pool as well, a free area pool, And then I started swimming at 9:30. At 10 o'clock, they have all these old people. First of all, I didn't know what was happening. All these old people just standing around by the pool. I was watching me. They're obviously watching a young man swim here. They're like my performance. And then but they all have these these little noodle things, these little floats. And what they do? What are they staring at me for?
Right.
Why are they looking at? They're always looking at us swimming in these about 5 of us in the swim lanes, 2 lanes.
Yeah.
And I thought, why are they looking at us? And I realised there's a class. They checked us out in the swim lanes at 10 o'clock. I thought, well, hang on, there's a free pool. There's one woman in the free pool. And they said, why do you use that bit? We're swimming, you fools. We're not doing stupid rub. I don't know, anyway, so that got on my nerves. So that wasn't the optimum time. But I found out.
Right.
I went in the other day at literally 1 o'clock, and I was the only one in the pool.
There you go.
This is perfect. And the trouble is, I was dreading someone else coming along there, because you see some old person walking towards you, you say, piss off. Don't get in the pool.
Yeah.
It's my pool.
Yeah, my pool.
You're protective then. But when what was sort of in that time, because apparently for the hotel as well, there's no kids allowed in between 12 and 2. So that's why. So that's
there we go.
So that I find it. But you know what? It's amazing. I feel so much better after a week of exercise. I really do.
Yeah.
Mentally, not just I'm a bit tighter and taut, around the chest and all that stuff, but in the arms. But I just feel mentally so much better. And I always say to myself, always exercise, always in your life. If you're feeling a bit down, if you listen to this podcast, you should be feeling down by now because you're 5 minutes in. But no. Yeah,
when are we talking about stocks?
Sorry. Exercise. Honestly, try it. It works very well indeed.
It is. Yeah.
Anyway, so let's go to stocks. So. First and foremost, you still hold Biome. I didn't know that. Biome Technologies, which I dumped a while back because they kept delaying and delaying. They went from one excuse to another one about supply chains and something else, and I don't know where they're at the moment. But they've off the bottom. Look at the chart there. Biome Tech. They went down to 46 pence, and now at 128. So if you'd bought at the bottom there, you more than double your money there. But obviously you didn't buy at the bottom. You bought more at the top, didn't you?
Yeah.
How much are you down on those?
Oh, I don't know off the top of my head. I'm not sure. Yeah, it's a chunk. Probably, I don't know. 50% probably. Yeah. So, because it was such a big crash, and I know there were reasons for you dumping it, and because they came out with, a suggestion. They were suggesting the results were going to be okay, and then the results were pretty dire, weren't they? So, but that's 6 months ago, 10 months ago. And so I've done my classic sit and hold, really. It's a tiny market cap, less than 5 million. It's one of those, isn't it? Yeah, it's one of those hope potential stocks. So, but it's had a good rally this week. Yes.
In fact, it was less than 5 million. Now it's 5.01. So it's just gone over that.
Okay.
So it's just do you know what? You'd have watched the webinar this week. But I did
absolutely.
I did a session on charts, right? and how to sort of, and this is a reasonably high level of accuracy, and it's taken me ages and lots of jobs. What I did was I went through some of the best performers of the last 6 months in the AIM area, right? I looked at the charts of all of them and see if anything lines up that would signify a sort of a rise, a trend, uptrend. And you'd be surprised at what I come up with. I'm not going to tell you right now on the podcast because it doesn't do it justice, but I'm looking at Biome share price, and even that conforms very well to what I'm talking about. It's basically price action, moving averages, and when it crosses one sort of moving average and breaks a new high, then you're guaranteed to a high level of probability that it's going to rally. And that did very well. In fact, looking at it, really rocketed on the. You could put a line across where it really rocketed. So so it's worth going back to the webinar and watch that, Peter.
Okay, I will.
And you can see I looked at lots of examples, and they all conform. And some are a little bit dodgy, but mostly they all conform. But of course, if you pair that together with so Steve's come back in, because we looked. Steve, by the way, Malta Steve. He's in Malta. He's filming this House of Screams. It's like the Big Brother with gamers. That's gamers. Then Steve, what did you say? It's a good sound. We had to look at it on video, and Steve said, "I'm doing way more than sound. I'm directing cameras, PTZs, working from 8 a.m. to 3 a.m. I'm very tired." What you know about? We're getting paid. What's PTZs?
Potentially. Don't know.
What are those? Okay, so anyway, he's come back. But yes, check that out. And literally, I mean, I don't know how au fait you are with charts and stuff, but I mean, on the website, I do show you how to set up a chart so you can get what, after. But yeah, it works. It works. I looked at about 12 stocks that are the best performers of the last 6 months on AIM and said, look at these charts. They all pretty much conform to this setup. And it works very well.
Well, in terms of, I will watch the webinar to understand it, but what you're saying is it's a setup in terms of like a recovery. Is that what you're saying? Yes,
so you'll see.
Right.
Well, in fact, when a stock is in an uptrend as well and pulls back, it also happens. So you'll see this, setup happen again if it's in an uptrend. But typically for stocks where. So I paired with fundamentals, so I won't just trade stocks based on these chart formations, because I have to know whether they've got good cash balances and they're going to grow in the future, because then the rise is sustainable. If it's like a micro-cap stock with no cash and it does this setup, then there's a good chance they'll try and raise money if it rallies strongly, and it'll just come back down to earth. So you want a sustainable rise in the share price and make sure you've got a strong balance sheet. So I do that as well. But so I got loads. I literally, last night, I went through about 400 alerts on my TradingView platform there, and I realigned them, reset them up to look for this condition.
Oh wow! Okay.
Yeah. So,
but that's the classic kind of crossover between technical analysis and fundamentals, isn't it?
Yeah. So a techmentalist. I'm a techmentalist.
Yeah. But that's good, isn't it? Because you kind of go, you can look at a chart and it might be, it looks great from a charting perspective, but real world fundamentals, have they got cash?
Well, and also it's true. But people say I'm a technical analyst, I'm a fundamentalist, and all this stuff. Is it a growth stock? Is it value? So sometimes I don't think we are, as humans, we want to label, put people in boxes, and say, what do you do? Is it this or this or this? And essentially, you can be a hybrid. There's a hybrid cars, there's hybrid all kinds of things. So you can be a hybrid. And I remember sort of Warren Buffett saying, people talk about growth and value. He said, no such thing, really. You should look for both. You should look for a company that's of good value and it will be growing. Of course, when he's looking at companies, he's not looking at breakneck growth of like 20, 30, 40%. Well, I haven't said that. Some of the big tech companies have done that. But he said you want to look for growth and value, because you don't want a company that's good value but never going to grow, because the value will just keep getting better value because the share price will never go up, and stay the same value. So, or if it's not cash generative, it'll become worse value, because you can see companies, like I said, they're priced below their net assets, but if they're loss making, those net assets will depreciate, or the assets will depreciate because they're burning cash. So cash is an asset that will go down. So in the end, they will lose value. So you want to see a company that's good value and generating value, so that net asset goes up. Otherwise, if it's loss making, it's going down, isn't it? So you need growth and value. So it's almost like saying, I mean, for a while, I've called people, called you dirty trader and all that stuff, or whatever, or investor. And I think it's all semantics, really, isn't it? I mean, essentially, at the end of the day, I'm a long-term investor. Are you? I'm long-term. Well, hang on a second. Don't put yourself in that box, because sometimes. No. If you've done well on a stock, say you've invested in a stock that's done very well over a short period of time, you expect it to take a lot longer, for example, then don't be afraid to jump out. If you think it's risen quickly and it's way above the valuation you think it should be, because that can happen, when you get momentum in the share prices can go, shoot way past where broker targets are. You can go double, treble what broker targets are. And yet you can sit there and think, this is good, isn't it? But you think, hang on a sec, this is a little bit overvalued. It's a little bit crazy. So there's no harm in taking money off the table if you surpassed sometimes I'm a long-term investor. No, I'm not actually. I'm an investor, and the time frame depends on the return I get on my money, essentially. If I get my return on my money very quickly, then I'm not going to be a long-term investor, and then all of a sudden let it come back down to earth and miss out on a profit, So it's almost like you should set, you should say, I'm going to set a bar here. I'm expecting the stock in the next 2-3 years. If you're microcap stocks, you want it to almost give you multiple returns. But say, I want to get, say, 200% of this stock in the next 2 years. If you get that within a year, or, especially out of a bear market, then take some money off,
Yeah, But don't you feel that at the moment in this market, people are keen to take money off as soon, just any bit of profit they'll take. And it's a big problem. The one thing I've noticed, or maybe it's just wishful thinking, but it feels like money is creeping back in. I mean, certain stocks in my portfolio are kind of rising. It feels like a change, but I don't know.
I had that on I think Wednesday, was it? Or I think it was Wednesday was a good day. Almost these days of liquidity, then all of a sudden it comes back. It's like the tide is trying to come back in. But when you get a tide is coming back in, but it has to go out first. So literally it is coming back in, it goes back out, and it slowly makes its way up the beach. Yeah, it's a bit like that. I mean, I'm still a little bit cautious. Just because of the yield curve and where that's gone, and also the fact that we may be like Thursday and Friday weren't very good, but I think we may be rallying in sentiment with the US indices, but they're distorted towards like those big seven, the Magnificent Seven, which they make it 50% of the, and they're rallying on the backs of basically funds going into them, and because obviously index funds re-weight towards bigger market cap companies, or because of the AI thing, and that's all about AI, and that's a little bit of a bubble because those stocks are rallying. They're big stocks anyway, so I'm a bit worried that. I still hold a decent amount of cash, and
What percentage? What percentage
50%,
cash are you?
50%. But I've been like that for a while now because I just think I want to see. There are companies I'm looking at, and if they are becoming down in value, and I quite like them, I'll buy them. I'll edge in a little bit, but I don't think yet we're at that stage where I just back the truck up, go. Just I was going to say something else a bit rude, but I can't put that in just
No, why not?
It's referring to gonads,
Oh, okay.
That saying.
That one.
Yeah.
Okay.
So I don't think we're at that stage. I think we need I think we need one more big sell-off, and that'll come from the American markets or something. I don't know what happens, but and then maybe if we see then the downtick in inflation is going to come down. It's like literally if you look at all of a sudden the Fed. You see the Fed this week, they paused, and it was called an aggressive pause. Basically, they didn't raise the interest rates, but they warned that they would do a further 2 times if inflation kept going up. It's almost like they tried to warn the market or people, stop buying stuff, okay? Stop giving wage increases, because if the inflation goes up, we're going to put the interest rates up. I don't think they will, because we're seeing early signs that the labour market in America is softening a bit. And if that happens, that will naturally bring down economic exuberance and growth anyway. But they're just warning. It's like they call it hawkish and dovish. If you're dovish, you're quite bullish. If you're hawkish, you're not. And they called it contrarian. Last time they raised it, but it was a dovish raise. That means they were quite benign and sort of quite. It's okay, we're just raising a little bit. And now they didn't raise it. Right, be careful. It was like a hawkish raise, a hawkish pause, which obviously you can't. It's like an aggressive step or skip, which is a bit silly. You can't really do that. It's like being aggressive on doing nothing. So how can you? So I don't know. And the one thing that gets me right above everything else. Look at any other metric ever. any other metric you could look at.
Yep.
And if you go back to the inversion of the yield curve, regardless of what you think about, what you know about it, if you understand it or not, it's an excellent predictor of recessions. And it's predicted the last 10. Now, like I said, if it mean you were playing darts or something, right? And I said, Pete, and I've been practicing for years and years and years. I said, Pete, I'm going to hit the number 20 10 times in a row, okay? I'll get my arrow in the 20 10 times in a row. He said, no way. And I do it 10 times in a row. Would you want to put big money on me doing it for the 11th time? Would you bet against me? You would. Yes. You're not going to do it 11 times. No way. And you'd be skint. Oh, no, okay. Okay, 12 times. This time I'm going big. Really big. Oh, no, I've lost again. No. Oh, God. No. Right, 13. You won't do it 13. So exactly. The inversion of the yield curve has predicted the last 10 recessions since 1955. And now it's more inverted than it's ever been since that time. So... is it, just playing around with us? No, you can't do that. I don't know. Is it different this time? I don't know. I wouldn't bet against it, though. On those odds, 10 out of 10 times, it's been spot on. That's good odds, isn't it?
Yeah.
But then, it can happen, no? It can happen.
Exactly. I suppose you could argue everything comes to an end, so everything changes, but
So if Wales beat England in rugby 10 times out of 10, would you bet on England winning the 11th time?
Yes.
Yeah. Maybe that's a good analogy. So that's why I'm a bit cautious. I think something's got to play out yet. Something's got to play out. Okay, before you...
I don't know, but don't you think there's been, in the recent years, like with the pandemic, I remember it hit, and there was that dash for cash, and then it was like, well, it takes ages to get out of this, and then, it rebounded really quickly, and it was because it's unprecedented, sure, but then are these unprecedented times
maybe
all around? I don't know.
I mean, let's be honest, the Fed has raised interest rates at the fastest pace ever. So that affects the short end of interest rates. So that would mean something, So maybe it would, Okay. Before we get into the macro quiz, it's good this. But here's a question. Someone said it's not. Someone said to me recently, it's not gambling. Our aim is gambling. I said all investing is gambling, and they argued with me. And I want to reiterate: is investing gambling?
Are you asking me or?
Yeah, go on.
Right. Is investing gambling? No. Well. Depends what type of investing you're doing, obviously, but generally, long-term investing, no, it's hopefully an educated gamble.
Do you know what? This is my answer, and we can argue this man is. I say yes, it is. It's all about probability. Basically, you are pretty much betting on the future of a company's prospects. That's it. Yeah. Now, certain companies are more likely to, fulfill the prospects than others. So. Why do certain companies have bigger reward? Because the chance of them achieving that reward is less likely and so more risky. But they could do it because they may have the products to do it and they may be in the right space. So, for example, let's compare, say, a small biopharma company with one preclinical asset in the cancer area, say, but it could be, it's brand new and they think this is doing things for cancer no one else has done, but it's preclinical. It's not gone through clinical trials. That means it's not gone through phase 1, 2, or 3 on humans. It's been tested on animals, maybe, and in vitro, in vivo as well, in test tubes, all that stuff, and they modelled it up data-wise. So it's not like that. Compare that kind of company, one asset, preclinical, to like AstraZeneca, one of the biggest in the world, right? AstraZeneca has a full pipeline of drugs, from preclinical to clinical, to many, many commercial drugs that are selling already. They're selling millions and millions every year, They've been passed by the FDA. Now, the revenue AstraZeneca generate is quite predictable because they know the amount they'll sell pretty much in a year of these drugs, how much is coming off patent. They've got patents on them as well, so how much come off patent. And they also know how many have been launched, so got FDA approval going to the market. They've also got a pipeline of, say, passing phase 3 and in FDA, and also all the way up to preclinical, so highest risk drugs, and they've got a lot of them, So you pretty much know what you get. The rewards aren't going to be huge from AstraZeneca, but there's going to be a reward because they're going to keep releasing more drugs in the market, and they're patented, so they're protected, so good margins, they generate that, and the more they can add, the better. So the risks aren't huge with them because if, one of those drugs fails in the pipeline, or it doesn't get FDA approval. It doesn't matter to them. They predict that's in the model. That's the risk. It's in the model pretty much. They know that. They know that certain drugs are not going to get the past clinical phases. So the rewards is largely priced in the rewards, but you will get reward, 5-10% a year, maybe, whatever it is. Now, if you are a single asset preclinical biopharma company, and your asset, maybe a novel drug that in animal tests shows it can kill cancer like no other drug. So the potential reward is huge, because that's amazing. It's an amazing drug.
What's the ticker?
Yeah. Yeah. So the reward is amazing, yeah? But the chances of you getting to commercialization are quite slim. For oncology drugs, they're like 13 to 1. To go from preclinical through to FDA approval, 13 to 1. So going back to that, 10 out of 10 times, this is like 1 in 13. You'd bet against me, wouldn't you? If I said, right, Pete, I'm going to hit the 20, I hit the 20, the dart with dart in 13 times in a row. And I do it once in 13 times. You're going to bet against me I can't do it again because I'm rubbish. I can't do it. I can't do it, pretty much. The one time I did it was a pretty much luck. So, you also... So if that fails, that company's gone through. And you also need a lot of money for clinical trials. But it could be one of the best, you could have, say... It could be backed by an amazing team of people who worked in big companies before saying, this is the best drug we've ever heard of. But nevertheless... the reward is massive, but the risks are also massive. And so there are, things you can do to, so basically you're betting on the future prospects of the company. And that's what it is. It's all about that. Everything is about the future in shares. How much money, the cash flow they're going to generate over many years. It's more predictable in big companies that are mature, lots of revenue streams. And if you take a hit, it doesn't matter because there are lots of revenue streams. Small companies not, but the potential could be massive. There are things there are things you can do to reduce those risks, i.e. make sure the company has loads of cash. Make sure you invest in companies if it's a biopharma company, for example, make sure you look at companies that are quite a way along that maybe clinical phase, clinical trials, maybe phase 3 or whatever, or even past that, but the market hasn't really priced it in for some reason. You think, why is this coming up priced in? It's like, I've seen companies, so that kind of thing. It's maybe a disconnect there, and all that stuff. So so there's ways of doing it, but that's just. So I think everything's gambling. Everything in life pretty much is gambling.
Yeah.
You're gambling with your life when you walk at the door, but you know the risks and rewards. It's all about probability. In fact, with preclinical sort of companies, there's a possibility you would get there, but it's not probable. But with AstraZeneca, is it probable they will earn what's forecast by the brokers next year? Yeah, pretty much. So they know how many drugs are going to release, and they know the market. So it's been doing it for a long time. So
Well, and I think we said this before, but the difference between this investing and gambling on, say, sport, for example, is that this is a long race, and it's not necessarily. Well, it's potentially never over. It can have downturns. It can have massive upturns. It's a long race, and it's like you said earlier about taking profit when you feel when it's right. I suppose the equivalent is the cashing out thing you can do on bets, isn't it?
Yeah. It's almost like it's not about winning the race. Yeah, it's not about winning the race. It's will the horse get round. And, And if you're betting on the horse getting round, it's a lot easier, and then you can cash out at some point. Some horses won't make it round. It's very rare, but some horses do die. They happen in the Grand National, And same with AIM companies. It's very rare AIM companies. You don't get one every week going bust. It does happen, though. No. It does happen, especially in a bear market. And as Warren Buffett said, when a bear market happens and the tide goes out, you see the people that have no swimming trunks on. And
exactly.
Yeah. I don't know where he swims, but
no, I'm not sure. Not in your gym.
Because there's no tide, actually. But also, I'd be surprised if I'd be surprised if anyone went in the sea really naked. But if you tide went out, say, I've got no trunks on. that happened once with me, actually. We went on a school party when I was a kid.
Right.
I wasn't there. Right. I wasn't handled joining these kids, but I was invited to a pool party as a little kid, and one of the boys forgot to bring their trunks. So literally, we all got in the pool. So what's his name? Let's say Paul. Where's Paul? Where's Paul then? Where's Paul? And also, he'd run as fast as he could from the change room into the water. We said, are you wearing your pants? He's wearing his pants. He literally ran as fast as he could, just jumped straight in.
Yep.
And his hands were... yeah. Okay, pick a number, Pete. Mac, with 3 questions here, right? So pick a number between 1 and 10.
Right.
So behind every number, there's a business headline from the week. You have to guess what it is. Go for it. Pick a number.
Right, 6.
Okay, 6. Who or what was blamed for inflation surprise in Sweden this week?
Oh, no, this Beyonce.
Yeah. I didn't really read the story, but they're saying that everyone went out and it's just...
Well, hotels and train tickets and all that sort of stuff, and yes, allegedly caused a spike in inflation. I find that hard.
Sweden reported higher than expected inflation, 9.7 in May. They said the start of the singles world tour in Sweden last month sparked such a frenzy of demand for hotels and restaurants meals showing up on the country's economic stats. That's phenomenal if that's the case.
Yeah, that is insane.
That is a world breaker there, yeah. Who is to invest in AI special effects research? Oh, sorry, I'm giving you a number.
Yeah. What number was that?
Yeah, it was number 2, that was.
Number 2.
Yeah. Who is to invest in AI special effects research? I guess I'm sweating in my office. It's so hot in here.
Right.
We're 3 minutes over we're 3 minutes over the 3-minute podcast, 30 minutes podcast.
Good point. Well, I don't know. Tell us that one.
Ministers are seeking to future-proof the UK's multi-billion-pound film and TV production industry by investing almost 150 million in a network of research labs across the country tasked with developing the next generation of special effects using tech such as artificial intelligence.
Right. Okay.
It's nice to see that they're protecting an industry that's quite good, because we are quite good at that.
Yeah. Yeah.
Okay.
Yeah, we're pretty good.
Go on, pick another number. Last one.
4.
4. Okay. Who objects to $250 monthly payments to victims?
What? I don't know.
So who has objected to paying their victims $250 a month?
Is it Trump?
No, it's Elizabeth Holmes. You know?
Oh, okay.
Theranos,
right, yes.
Yeah.
Theranos, yes.
Lawyers for disgraced CEO who was once worth $4.5 billion, they say. Well, I don't know if she was. It was like, a company was, but it was built on nothing, wasn't it? They put that money into it. But apparently, disgraced CEO once cannot afford to make $250 monthly payments to victims of Theranos fraud. Who's the victims? The investors, was it? Yeah. Lawyers for Holmes strongly object to suggested payment. She's in prison. That's nuts, isn't it?
Yeah. So
Murdoch. Yeah. I didn't read that. Rupert Murdoch. So the judge. Who else? Where's the other guy? So Rupert Murdoch invested in it.
Yeah.
And Oracle CEO Larry Ellison, I knew how Larry is, but Murdoch invested $125 million in Theranos. You would think, do you know what? Wow. It's like due diligence, isn't it? You realise if you see some other big, all you need is one big hitter with a bit of cred on board that doesn't do due diligence, and everyone else follows. They go, well, he's on board.
Yeah. Must be good. So that's the thing, isn't it? Yeah.
Exactly. A CEO.
I didn't realise he'd invested that little. Yeah, wow, that's a lot, isn't it?
That's nuts, isn't it? And because you realise that, well, if Larry's investing in it, it can't be in. All you get is, you get Elizabeth Holmes taking one of the guys out for a drink, get him drunk. Yeah. We give Rupert a call. Yes, and call Rupert. You get 2 on board. It's like a literally a snowball in effect of money coming in, and literally it didn't work. It was a machine. Did you see the documentary?
Well, it was fake. Yeah.
Well,
dramatisation, wasn't it? Yeah.
Yeah. We should come up with something like that, Pete.
Okay, right. Good plan.
But when you get that, when you get something fake like that, you shouldn't actually try and take it to the market. Just take the money and run, you fool. It doesn't work if the box didn't work. And she's like pretending it was. And this is probably thinking, she must have had some sleepless nights thinking, how far can I take this lie? Or did she think in her head, she was so deluded, she believed it would work at some point? I don't know.
Yeah, that's the thing. I think it was, wasn't it? I think she knew obviously it didn't work, and she was covering, but she felt it would eventually. She'd have a product there, but she was deluded.
She is now. Now she's deluded in prison.
Yes, that's right.
It'd be an interesting chat, though, sharing a cell with her. you know, but just wouldn't it be good, be interesting? Better than sharing a cell with like just a car thief, you know.
Good point.
That'd be boring. Okay. Any plans this weekend, Peter? What's happening?
You know what? Not much. It looks like quite nice weather, so let's just enjoy that.
Just going to stay in with the curtains closed, yeah?
That's it, and just sit out in the dark room. That's it. Exactly right.
It's too hot, though, isn't it?
Yeah. Yeah.
Yeah, thanks for that. Right. All right. Well, on that cracking end of the podcast, have you? By the way, we always normally, if you've got to just say no. Have you watched any? I haven't watched anything on TV recently that's any good whatsoever. I don't know why that is. I haven't seen the end of Succession actually, but I got bored when he died.
Okay.
Did you? Have you watched that?
I haven't watched it. That's a big spoiler that you've given out
sorry,
there.
he dies.
That's
yeah,
great.
sorry. So
okay, brilliant.
By the way, if you're not seen the end of it, don't listen to this bit of the podcast. All right. Cheers.
Yeah. Okay. No, I haven't watched anything really. I don't really tend to watch a lot of TV, but no, I haven't. The Tour de France documentary on Netflix is okay if you're into cycling, but there's not much you don't know already. But
right, so you've left us with the recognition it's okay, but not if you're not into cycling.
Yeah.
Listen, that's excellent review. We'll leave it on that. It doesn't get much more mediocre than that. It's okay.
No, exactly.
But if you're not into cycling, I wouldn't bother. All right. Okay, so there we are.
Yeah.
Cheers, Pete.
Right, nice one. Bye.
The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.